session. I mean, personal finance for me is something I'm really passionate about, and I'm always happy to help in coaching others because I think for millennials we want that financial freedom that comes with it. So my session primarily will focus on investment, the investment side of things, because you want to grow wealth. So I'll just move into the next slide, Olumide, which is the first part of the presentation. Can we switch to Olumide? Oh, thank you, Olumide. Okay, so yeah, I mean, in this slide, I came across a tweet. For some of us who are quite active on Twitter, we must have seen this tweet. But I mean, it's very striking. It's a story from when Nigeria was still Nigeria, basically. That was probably 1965. I think the tweet references 1965. So the man is talking about his mother and her co-teachers. So back then back then 1965, so the government gave them car loans for teachers to buy cars, basically. So all of the teachers took out their loans. Some of them sort of taking out their own loans and buying out brand new cars, expensive brand new cars at that time. But there was this outlier, who bought an old car, then. So he took out half of the value that other people took then and bought a second-hand car. And everyone thought he was like crazy for doing that. He also employed a driver. So according to the tweet, they were calling him second-hand big man, something like that. Yeah. So I mean, quite interesting. In fact, one of the teachers found the driver, using the car for taxi, and came to report this driver to him, the teacher. And funny enough, he said that he's aware that the car is actually used for taxi during the day. I mean, how can you keep your car just sitting down for 4 to 6 hours, just there, not making anything for us, and funny enough, according to the story, within the first year, the man had paid back his loan. I think by the second year, he had bought 2 cars, third year, 3, just like that, progressing, before he had a fleet of cars, that were around the road for him. So this is what some of us do with our money. So it's a 2 parts. We're either spending it all, just borrowing a leaf from Obasan's last presentation. We're either spending it all, but there are always few outliers, who don't spend it all, who rather prefer to invest. So that's what the man did. He made an investment. So why? So I mean, you can also look at it from this way. Why do you let your money sit down in the bank account, earning you nothing? Basically not doing anything for you. When you can put that money to work. So that I mean, I just go straight onto the definition of investing. So investing really, it's clearly a state of mind. There are people who have a state of mind that, hey, my money must work for me at all times. So you don't want a case where money is just sitting around. So it's a state of mind, to always desire to have your money, work for you. It's also strategically planning, because there's a lot of planning that goes into investing. I think in the subsequent slides we'll see all of that, information. So like I mentioned, it is strategically planning, and utilizing your current pool of financial resources, to generate future cash flows, and ultimately wealth. So the idea behind it is it's largely that you definitely have something, even from the Bible, or you can see the tree by the right hand side. You're definitely going to sow a seed. I'm not preaching right now anyway, but you're definitely going to have something in your hand that you would want to work for you, that you want to multiply, for you basically speaking. So I mean, also I took out a definition from Berkshire Hathaway, Warren Buffett's holding company. I took out a definition for investing. So I mean, they called it is the transfer to others of purchasing power right now. So your current purchasing power right now, the transfer to others with the reasoned expectation, of receiving more purchasing power in the future. Because whenever you are investing, you are expecting to receive, something extra on top of your, will I say, capital. So it's not really just, the capital itself. You're expecting that your capital, can yield you something, basically. So which is why it's saying, okay, you're delaying gratification today, your current purchasing power today, with an intent to receive more purchasing power, later on in the future. So I think it's also very important to note that, I see a lot of, core finance people on this presentation. So I don't want us to feel like this is quite basic. There are a lot of people who can't relate. So I mean, if you've been outside the field, you will understand that there's a huge knowledge gap. The things that we find simple is actually not that simple, for those outside. So I'd like us to continue with the session and, try to get as much as we can get from it. So I mean, if you look at the tree, we're talking about financial freedom, because the core reason why you would want to invest is to be financially free. It's a core reason. You want to have that financial independence, from family, or from people you depend on. You want to have that self financial, power by yourself. So there's always a base point. The base point is always going to be your current resources. So what do you have at the moment? That's going to be your base point, at all times. What do you have at the moment? Then you have to identify an opportunity. I'm taking it from the bottom up. You have to identify an opportunity. Then when you do that, that opportunity should be able to generate you a return, and also generate you capital growth. So I think this will really, touch on some of the things that we'll talk on in the next slide. It gives you a return, and also capital growth. So your capital should be able to, change price from what it is today to what it will be tomorrow, such that, yeah, okay, I just saw a note on Olumide. So yeah, I just move on. So I mean, what are the most reasons why we should be investing? So I try to outline a few here. So you want to meet financial goals. That is usually a paramount reason why you want to invest. So you have financial goals. Abasom made reference to someone trying to save for an MBA in 7 years. But you want to also be able to invest. So there should be like a platform that helps you. Okay, how much you need to put down every month for you to meet this goal? That sort of planning, financial planning for you to meet your goals, your financial goals. So that's one of the reasons why you're investing, because you have a target. You want to buy a house, you want to buy a car, but you want your money to work for you and also earn you some income. You are also trying to earn passive income. So most likely your current income, there's a mismatch between your current income and your current income here and your current expenses. So you can actually have investment income from some of these investments that we would mention in the next slide. Yeah, I'll move on fast a little bit. So you also want to build generational wealth. So I mean, like, the rich we have today, for example, like a Jeff Bezos, or, who's like the world's richest man. They've built that generational wealth because they put in the work, they put in the investment. They build that generational wealth. You also want to plan for the future in terms of retirement planning. So I mean, funny enough, when I was at Chapel Denham, I facilitated quite a significant transaction. There was this, would I say, about more than $200,000 worth of transactions. So someone was trying to invest into our infrastructure fund, which was perhaps the highest yielding instrument in the Nigerian capital market at that point. And this person is retired. So because he had like some form of savings or some form of backlog of investment, pools. By the time he retired, he had quite a lump sum of money that, okay, if he invests that amount, he can be receiving up to, do I say, 2 million naira every quarter in investment income alone. That's enough, I mean, in Nigeria, as you know, if you divide it by three, you have something sometimes for the month, which can take care of his family according to his needs. And he will also have others as well, other form of investments are also yielding for him. So you want to be able to plan. So you must always have a goal, ahead of you, a goal into the future. It's very, very important for us to draw goals, even as young people. Plan towards the future, plan towards your retirement, plan towards your goals, basically speaking. Lastly, you want to secure capital for business. So some of us are looking to start a business in the next 5 years, 6 years, or 7 years, what have you. You want to be able to start up something. So you need that capital, and you want your money to work for you. So that means you can put in your money into an investment opportunity and also reinvest your return, such that it's compounding over a period of time, that you're able to secure capital for your business. But then it's all goal based, really speaking. So if you look down below, I mean, I would introduce a new asset class, largely down the presentation, because it's fascinating when people talk personal finance. They forget a lot of factors, So I move on to the next slide. So we are saying that the greatest investment you can invest, is actually into yourself. So Olumide, can we move on to the next slide, please?
Okay.
Yes. So let me start off on the asset class I'm talking about. For those that follow me on Twitter, you can follow me on Twitter at @Ebovi_Wally. For those that follow me on Twitter, I put out quite an interesting tweet some days ago. I mean, I said that. So I mean, follow me to the red guy, which says earnings potential. So there's this notion that when you talk personal finance, it's only about cutting down your costs, it's only about saving, it's only about investing. I think there's a very, very big part of the equation that people are not getting right. It is your ability to actually earn right. You want to earn right, because I mean, I spoke to a friend the other day, and she was like, the goal is not just to save, it's not just to invest, not just to cut down expenses, but it's also for me to earn right. And how do you do that? You do that by investing in yourself. It's an investment opportunity, and it's an asset class on its own. So, for example, people that go for MBA programs. I'm not sure how familiar a lot of us are with that program, but if you are in the university, it might seem like just a normal master's degree until you come out to the real. I'm not saying real world anyway. Until you come out to the industry, and you see how important it is, and how your earnings power can almost triple by the time you do an MBA program. You can also, I mean, if you go to a top school in the US, you can get a good job, a dollar earning job. That's quite fascinating as well. So I'm saying that in this point, that a part of the investment universe that you would have is your ability to invest into your earnings potential. So that guarantees you to some sort of level, higher salaries. It also guarantees you some form of fulfillment, in that regard. It also gives you a fast and a stable path to wealth, because to a large extent, a lot of people might not be able to start businesses, but if you notice, those who work in corporate world, or C-level, managers in their own businesses, whether it's trade or whatever it is, as far as you're able to increase your earnings potential, you are able to sustain some level of wealth, that some people cannot necessarily, sustain. So you get the point. Your ability to earn right is actually a key part of personal finance. So you look out for that job that will pay you right. You look out for that job that would make you earn right, and you also invest into yourself. Take the CFA program, take the ACCA program, whatever form of certification is there in your own field, it improves your ability to earn right. So let's go down to the normal asset classes that you hear about. So let's talk about equity markets. If you look at the first green bar, or the first green box there, it's foreign and local equities, because um, if you're in Nigeria, you would know that the Nigerian local market has not really performed exceptionally well in the past few years. So a lot of retail investors, a lot of retail, I mean yourself, um, you know um, young people are looking to invest in foreign stocks, basically. So I mean the world is so flat that you can stay here and buy stocks in London, stay in Nigeria and buy stocks in the US. There are a lot of platforms, and I think one of the platforms is going to speak to us. Tro Finance going to speak to us at some point. There's Bamboo. We have a number of them down on the startup bar, down there. So talking about equity. So this is one of the asset classes. And equity is like an ownership stake. So when you invest into an equity instrument, for example, the company is selling shares. So what that means is that a company is trying to raise capital to finance some part of its business. Like what I'm doing right now, we are trying to raise capital, but although its mine is not on the public market. So we're trying to raise capital to finance the business. And in order to do that, you are selling ownership portion, in your business to investors. That's what the equity is. So the equity instrument, guarantees you, access to dividend. A dividend means, for example, you buy a GT Bank, a GT Bank share in Nigeria, and GT Bank pays you some, maybe, I mean, I'm just assuming, maybe 10 naira every year, just as a return. So you have a share of the profit as an investor. So every year, these companies that you have bought stocks in a number of them will declare, for example, they've declared the profits, or after removing all their costs from their revenues, they declare a profit of 40 million naira, and they say, hey, we're going to give out to our shareholders 50% of that 20 million naira. So based on how much you have bought in the company, you are entitled to dividend, so it's some form of return. So for example, if you look at this, very closely, you can just pinch your screen a bit and pull it in. You'll see Apple. So Apple has done, between the last 1 year, it has done 93%. Then there's also what we call dividend return, or the dividend yield. So that's when you divide your dividend, what you get per share, by the current price of that instrument that you are holding, which is like your Apple share. So I mean, the dividend is quite small relative to the price of the stock anyway, which is very, very common in the advanced market. So they might be very excited seeing a 0.8 return, but an investor in Nigeria, might not be very excited seeing a 0.8, dividend yield, because you have things like, inflation. I mean, I'll talk about that in the next slide when we talk about benchmarking your investment. So let's move on to the next one. The next one is fixed income. So you also have access to fixed income instruments. A fixed income instrument is, in a sense, it's like a debt instrument. So rather than having ownership in the company, you are giving the company, a loan per se, for a guaranteed interest rate. Basically, either it's a company or it's the government. So it's usually, I mean, governments are the largest issuers of this kind of instrument. Because I mean, I don't think a government can sell shares to people to raise money anyway. So they have to do some form of guarantee, and and the governments usually have form of influence. Like Nigerian government is usually oil money they use to pay back some of these loans, basically. So you are giving a loan out to a government or to a company under the fixed income instrument. So you will hear things like treasury bills. You've probably heard about treasury bills. A treasury bill is like a short-term instrument, within a 1 year period for you to borrow the government. So you buy a treasury bill from the government, which is like an IOU instrument. So the government owes you by giving you a certificate that, hey, you have given me 5 naira for this certificate, and at the end of the 1 year period, I'm going to give you 10%, interest on that money that you gave me, and also return back your capital. But I mean, if you're also following the markets in Nigeria, you will be informed about what has happened in the fixed income market, particularly at the short end of the market, where rates or interest rates have really crashed, to very low single digits. I think at the last auction for treasury bills, it's in the 1% range. I mean, if you compare that to inflation, I'll talk about that in the next slide when we talk about benchmarking anyway. So I also like to also talk about exposure to dollar-based instruments, because you're an investor, you're not a charity organization, so you don't want to always have your money losing value, which is why a lot of people are looking to go outside Nigeria, buy equities outside Nigeria. You can also invest in dollar-based fixed income instruments. So I took the screenshots from the Cowrywise platform. Let me also give you some sort of places that you can visit for some of these things. You can visit Bamboo for equities. You can visit Cowrywise for fixed income instruments like a money market fund. Yeah, there's also Eurobond fund. So Eurobond fund is when the government is taking out dollar loan. That's what a Eurobond is. For example, Nigerian Eurobond, a government or a company, they are taking out a dollar loan from the public markets. Right? So, but most times you cannot invest into a Eurobond because sometimes the minimum subscription is like $250,000 for one unit, and you can't buy that. So that's why there's a Eurobond fund. And what they do is that they aggregate, each
so,
of
sorry, Obovi.
yes.
Sorry, Obovi. I'm
Yes.
a lawyer. What's an Eurobond? What's a Eurobond?
Okay. Just to be clear, so I'm not going to be saying
so I just wanted you to dive a little deeper in some of those things so they can get what
exactly.
you're
So
talking about.
let me be very clear. So to be very clear, when I'm talking about a fixed income instrument, I'm talking about debt, a loan. So you're giving loan to a company or you're giving loan to the government, you get. And in order to give this loan to the government, they have to guarantee you some form of constant interest, which is called like a coupon, So for example, I talked about local instruments, like for example, I talk about treasury bill. So a treasury bill, the government is trying to borrow from you, in Naira. That's a Nigerian treasury bill, trying to borrow from you in Naira for a 1-year period, for a guaranteed return. But now when I'm talking about the Eurobond, in this case, the government is trying to borrow from you in dollars. You get. So this is also issued on international markets, for example, like the Irish Stock Exchange, on the London Stock Exchange, where investors will buy this instrument in dollars. But this instrument is quoted in dollars. So if you type in Eurobond into Google, what comes up is, for example, Nigeria is trying to issue a $3 billion Eurobond, basically. But what I'm saying now is that as an individual, you are not able to buy that instrument, except we have some very high net worth individuals here who have $250,000, or more to buy one unit of a Eurobond, So there's something called a fund. So a fund aggregates money, into so I mean, it's similar to what you have these aggregate guys do. That's the next point I'm talking about. It's very, very interesting. So a fund aggregates your $1,000. Some of us here can afford $1,000 anyway. So a fund aggregates your $1,000, your $500, into bits and pieces until it's able to generate up to $250,000 or as much as possible to buy, a unit of that Eurobond. And then the interest on the Eurobond, the interest is usually tied to the US dollar instrument, that's like US 10-year treasury notes. So for example, if you look at the slides very closely, let me give you an investment strategy. So these are two instruments, in the capital market right now. So if you go to Cowrywise, check fixed income, you come across these two instruments, quite interesting instruments. So there's a Eurobond fund and there's a money market fund. And you have the opportunity to invest in a dollar instrument, which is yielding you, because I will show you in the next slide. Physical instruments are actually the largest forms of, for example, Nigerian capital market is probably like, 70-30 in favor of fixed income, 30% in favor of equities, basically. So because I mean people don't like taking risks, it's kind of guaranteed. So now look at this. You have a euro bond, so you have the opportunity to invest in a dollar instrument, that is higher yielding than a local instrument. Because in the event of a devaluation, for example, we have seen strength of devaluation this year, so I would have been better off by investing in the euro bond that is yielding a 6% annual return. I'll also capture in returns from exchange gains. So for example, you're now changing that same $1,000 that you bought at 360. When you're converting it back to naira, now you're changing it at 450, in the black market. So that gives you some form of dollar gains on that instrument, which is actually very, very interesting. So people prefer to hold their money in dollars because the naira is quite volatile. Things are quite shaky. Oil price is a strong terminal of the naira's value. And people want some form of security.
Sorry, Ebobi. Yes. Ebobi. Could you just dwell a little bit on why the naira is? I mean, you say the naira is volatile. I don't want to understand what that means and how that will impact my investments as it were.
Exactly. Okay. So when I say the naira is quite shaky, so I'm saying that how do I put it very simply? So I'm saying that the naira is going to lose its value. There are quite a lot of pointers to it. So for example, we have oil prices is like the backing of the naira. So we have had oil at $80 a barrel. The naira was around 360. The oil price sort of like halved, to a large extent. It even went as low as $20. The CBN, has been fighting to keep the naira, within bounds. So they kind of did some adjustments by taking it up to, I think it's as high as 381 now in the official market. So they've taken it up a bit, but that's still not enough. I can give you some form of guarantee that to a large extent, it's still going to give some further, some further room, because there's a strong backlog of demand on the naira. There's a strong pressure, for dollar demand in the local market right now. Backlog from the lockdown, backlog from investors who have not been able to take out their money from the Nigerian market because of the CBN's restrictions, around the dollars right now. So there's just quite a lot that's going to push the naira, even weaker. And the parallel market is to a large extent a true reflection of the value of that currency. And we see the parallel market currently at 475. By the way, I also trade in dollars. So I also convert dollars for clients. So you can reach out to me for that as well. Yeah. So I mean, just to wrap up, the key point is that when you invest in a fixed income instrument, whether it's dollar based, whether it's naira based, but it's more preferable to do dollar based right now, because if you have a naira based instrument, I'm so sorry. Somebody said there's so many words. I'm trying to understand. Okay.
That's exactly what I was trying to achieve. That you break down some of those words so that you can understand them. But I mean,
I think there will be follow-on deeper sessions.
Yeah, of course there'll be other sessions. But one thing that I would do, right? I'll do a listing. So then this is what I will do for everyone this week. I'll do a listing of some of the very technical words that we hear in these sessions. Right? And I'll do a glossary, trying to explain each one of them so everybody will understand better. Yes. Right? Does that work for everyone?
Yeah, I believe that makes a lot of sense. That makes a lot of sense. Okay, let me just quickly dive in, because I have quite a number of slides left. Not so much anyway. I'm not heavy on slides anyway. So just to also continue, so I've wrapped up fixed income. So you get, when you buy a fixed income instrument, you are able to earn a coupon. So for example, you buy a euro bond, you get as high as 6% every year, 7% rather, on that instrument. So and you can get this by investing through Cowrywise. It's a platform. You can check your App Store or your Play Store. I also talked about price appreciation. This is more like for traders to a large extent. So I will not really dwell on this particularly for the fixed income market. Then I talk about having exposure to dollar-based fixed income instruments right now. Dollar-based debt instruments, basically. Let me not be using the word fixed income. So I mentioned that you have a higher yielding dollar instrument compared to a local instrument. So why not buy the higher yielding dollar instrument? Because you also be hedged, or you'll be protected from when the naira loses its value, because your currency is currently in dollars. So you can exchange at a higher naira value, particularly in the next 4 or 5 months, if there will be a further devaluation. Now, another very interesting asset class that we see today, although a lot of investment professionals don't like recommending this, but I can tell you for a fact that I think it's quite an interesting asset class, because when I mean I think it's quite an interesting asset class here, because it's an investment directly into the real sector of the economy. Because every other thing that we see here, except for example, when you invest into a company, you invest into a company's debt or a company's equity, most times you're buying stocks right now, you're probably going to be buying what they call secondary markets. Like somebody wants to sell what they have bought, so what they have bought initially, so they want to sell at a higher price or a lower price, or whatever it is anyway. But in this commodity investment, commodity investment, crowdfunding platforms, you have the opportunity to invest directly into the Nigerian economy, because that money goes straight to the farm. It goes straight to, to getting fertilizers, it goes straight to getting whatever the farm producer needs, and they're able to guarantee you some form of, attractive interest rate. Because, for example, if you look at this interest rate, which is the 16.5 interest, on your 60,000 naira per unit, I don't know if you can see that very well. This is cashew farming, and sometimes I will show you on the next slide, how you can also play around these guys. My strategy for agri commodity investment, or any of the crowdfunding platforms. Crowdfunding is when people are trying to raise money, from retail people through like apps, or through just like a GoFundMe basically. But you're not doing GoFundMe this time around for do I say, like, someone wants to go to school, just like we had Aramide send Aramide to Harvard earlier in the year. But you're doing this GoFundMe now to invest into businesses, and these businesses are able to guarantee you some form of interest, on that money that you have given them. Because, for example, the farmer was going to make way more than this by having access to your capital. So they can give you this 16.5 interest rate in a 6-month period. So what I do is that what I tell people is that stick to the big names, stick to the major names. So there's AgroRights, there's FarmCrowdy, there's Thrive Agri. Anything outside these three, or there's probably a fourth one. I don't have the name in my head, right now. But anything outside these 3-4 guys, be wary of the rest, because you need to do a lot of digging, around who is backing, are there insurance policies on those instruments, so your money is not lost. So I have a lot of friends who have done these things, and they have made it, for example, if I do this twice a year, you can get as high as 32% or 33% from doing this twice a year. So if I have 500,000 naira, cash right now. Okay, so I'll say the names again. Pascal said the names. So the names are AgroRights, Thrive Agri. What's the last one? Oh shit, missed my head. FarmCrowdy, FarmCrowdy. So those are the names you stick to. I saw quite an interesting crowdfunding platform as well. It's called RentCrowdy. So it's backed by ARM. So you also try and check who is backing these people. Are there strong names that you can put to the brand, so that you don't get swindled? So at some point last year, and I had this discussion, there was this people trying to do crowdfunding for diesel trade, and they are guaranteeing as high as 30% interest on diesel trade. It's not possible to do that, to give 30%. It makes zero sense, because if you look at it, this person that wants to do that diesel trade, you can go and get a lower money from a lower capital at maybe 20% to 25% from a bank as a loan. So I come to you and guarantee you 30%. That's even by the side. The other thing is that they cannot make a premium as high as 30% or 40% on that diesel trade, because prices are kind of regulated and the margin is actually very thin. So you also want to speak to your advisors as much as possible. I'll charge that on the next slide. Let's look at fixed assets. You also want to invest in fixed assets. That's property, basically property. You can also maybe non-fixed assets, maybe like things like gold, jewelry. So, for example, my mom, had bought some lots of gold. Do I say back in 2010 or so? And as last year when the recession, I mean, when things were kind of like, Nigerian economy, that things are now, it just get tight. So, I mean, my point is that she was able to sell up, this gold that she had bought then at even a higher price than she bought it. Those things. I mean, it's quite fascinating. So when you invest in those kind of artifacts, gold ornaments and all of that, fixed assets. I'm talking about land in this part right now. So there's land at Ibejuleki. I'm giving you like very, very realistic option, because you talk to a normal capital market person. Normal capital market person will tell you equity and fixed income. That's all they know. That's most of the times what they know, and that's what they tell you. But there's a lot of investment opportunities where people are making, a killing from. There's fixed assets. So I'm talking about land. There's also real estate co-investing, because some people cannot buy. You cannot buy some form of, for example, like a high-rise building in Ikoyi on your own. So there's some plans where, or a payment plan or some investing plan. So there's a website called Quorum. So it's spelled COREUM. So it's a real estate co-investing platform where they offer, for example, 1 unit of let's say a property is worth 10 million naira. They offer to sell 1 unit of that property at 1% of that is 100,000 naira, right? Yes, they offer to sell one that 100,000. A number of us here can afford 100,000 naira anyway. So they afford to they offer to sell 1 unit of that property. So that means that you are a co-owner of that building, of that property, and you are able to earn rental income to I think someone's mic turned on. Can we all stop our mics so that we can enjoy the session and learn as much as possible? But let me just, sorry, the someone's mic turned on. So I said agro rights, I said tribe agric, I've mentioned farm crowdy. I think someone should type it out in the chat box for everyone else to hear about. So tribe agric, agro rights, farm crowdy. I'm going to spell the real estate, those ones are agric. I'm going to spell the real estate co-investing platform, which is called Quorum. COREUM. COREUM. So that's the real estate co-investing platform. Yeah. So you can also have 1 unit of property, on for example, in a property at Ikoyi, and you can say you're an owner, although you're not really a complete owner anyway, because you just own 1% of the building, but they're able to get rental income, on that property, because you have 1% of that property. So you get rental income up to your value of ownership in that property. You understand? So I mean, there's also the tendency for your real estate prices to appreciate. For example, there are people that bought land in Oniru here in Lagos, Nigeria. I'm currently out in Yaba, Lagos, Nigeria. So there are people that bought land in Oniru, years ago, 1999, when it was very cheap, maybe like 1 million or 2 million, whatever price it was there. But now land is as expensive as 50 million in some parts of, in some parts of Lekki. That tell you how much appreciation. You can do the math yourself. There's the Lekki area is opening up right now, and there are a lot of platforms through which you can invest into land ownership there, and there are also payment platforms. I know a lot of us are working, so you can start small. You don't have to wait until you have 10 million, until you have 50 million. Most times you might never actually get there. Let's be realistic to ourselves. Except you have a lucky break. I mean, to be quite frank, So you will want to invest from wherever you are, from whatever income you are. There's always something for you, to a large extent in the market. Anyway, so let me move to the last one. The last one is also very interesting because you will not hear about it. So there's something called angel investing. You know about starting a business. Starting a business is also another form of investment. It's also another form of investment because when you start that business is able to generate you some form of return. Let me be practical about this. So I'm currently, like I mentioned, raising capital. I'm currently raising $1 million in for the platform I talked about. The platform is the second platform. So there's Piggyverse, there's My Away Home. So I'm currently raising $1 million for My Away Home. You could check out the website, My Away Home, I think it's .app or something. My Away Home app.co. Yeah, that's the website, www.myawayhomeapp.co. So you could check out the platform. So it's to help Africans in diaspora get mortgages to acquire properties in Nigeria, basically. So funny enough, we received $1,000 from an investor, just $1,000. We're raising $1 million. Somebody carried $1,000 and said, "I like your idea. Take this $1,000, and give me ownership stake in that business." Something as simple as $1,000. Some of us, to be very, very frank with you, I've met a lot of people that are earning a killing in this. It's called My Away Home. It's right on the slide. So it's right on the slide. So after Piggyverse, there's My Away Home, there's Flutterwave, there's Paystack, there's Bamboo, there's Opay. So My Away Home is what I'm talking about. So he gave, now that's called angel investing. So a friend who is starting up a business, a serious friend, a serious business. It's not the one that they come and tell you. If you know this person as a regular borrower and he's telling you he wants to start up a business, you know that this person is just a joke, to a large extent. But somebody wants to really do something, interesting, and you give the person as little as $1,000 to invest. I think that's converted around 460. So it gave us 460,000 naira, for $1,000, worth of equity in this business. I can tell you that, we've subscribed our investment well over $1 million, probably close to $3 million now, in terms of like how much people are committed to the platform. Although we're currently doing funding. What I'm trying to say, largely speaking, is that in 5 years' time, that man's investment into My Way Home will not be that same $1,000. You've had situations where a business that, for example, maybe you invested in Uber before it went public, and before you did an IPO, like listed on the stock exchange, and you've made like 13,000%, or you've made like 100 times what you invested. It's a very good tendency that this man's $1,000, in the next 5 years, can give him $100,000. There's a very likelihood of that, a very huge, likelihood of that happening. So the fastest way to have very strong returns is actually through angel investing, but it's also very risky. You'll see it on the next slide in terms of when I show you the risk matrix of this investment, options. And it's similar to, starting a business here. So it's just like, the co-founder now has started his own business, basically speaking, and he has, stake in this business. He has shares or ownership stake in this business. In the next 5 years, the business is now probably worth $1 million today. In the next 5 years, it could be worth $50 million. So if he has 50% of the company at $1 million today, 500,000. In 5 years' time, when the company is worth $50 million, it will have $25 million worth of the company. That's to tell you how interesting this is, and it's it's happening a lot with tech. So there's Piggyverse, there's Flutterwave. I think Flutterwave is currently worth, I'm not very sure. It's currently worth about 300 to 400. Someone might come somewhere. It's currently worth about $300 million to $400 million. This is a company
Hey, Bobby, it's me.
Yeah.
Okay, I'm just trying to hurry you up,
Okay, sure. I'm going to round up now.
Thank you.
I'm going to round up now. Yeah. So let's move on. You get the idea, basically. So we've talked about equity. We talk about fixed income. Talk about commodity and agri crowdfunding platforms, fixed income and real estate co-investing. We talked about improving your earnings potential. This is very, very important. Even if you see that a job is not going to pay you well, and it's not going to in the next few weeks or years, or there's no outlook, don't sit down there. Work for yourself. Do things that would help you to create wealth. Except that's your choice anyway. No one is defining it for you. So let's move on to the next slide. Only that's already shifted me. I've slept on that slide. Yeah, so this second to the last slide, we're almost done. So don't get bored. Yeah. So okay. So I'm showing you the risk matrix, risk return matrix. So if you look at the left part of the screen, you'd see yeah, this is risk return matrix. So I kind of compared, where does each of those investments sit? Because if you look at the second bullet point on the right, the second to the last bullet point on the right part of the screen, I said define your risk appetite, your investment horizon, consult a professional, and also to check out, investment forums online. You remember that I'll mention one that I think is quite interesting, So let me just have a sip of water. Just give me a second. Yeah, I'm back with you. So yeah, if you look at the risk matrix, so we are saying, on a scale of low, medium, high, where does this investment, opportunity, or this investment, investment opportunity, where does it sit? On the risk part. The bottom side is the return, and we said low, medium, high. So the safest is always the least returning. You get. So the safest is the fixed income instrument, the safest form of investment, to a large extent available right now. It's fixed income. I'm not talking about bank accounts. So, a lot of like to keep money in bank accounts. It's usually not the best because you're just making banks richer. Yeah. So there's the fixed income. That's the safest, and it's also the least returning. If you move up a bit in terms of, a lot safer as well, and also the returns try to get higher, is the real estate asset class. Is the real estate asset class is also there. I mean, the returns could also be largely higher than this, but I'm just trying to be as conservative as possible and as realistic as possible. Is real estate asset class. Now, the real estate asset class is actually much safer than the agri commodity asset class because you have a collateral, and the collateral is usually the property or whatever, actual land or building that you own. That means that you can use that collateral to go out and take a loan or to do something, but you cannot do that with, like, for example, an agri commodity investment to a large extent. There's no collateral on that. You're just trusting the fact that, hey, these guys will return my money. And I think there was at some point, during the pandemic when there were logistics challenges. I'm telling this because there are risks. There are risks actually. So during the pandemic, I think one of the platforms put out there, hey, that we're not actually able to meet up our obligations right now. They defaulted, and they defaulted twice actually. They weren't able to meet up our obligation at the moment because of the logistic challenges that have gone into the business. So they weren't able to probably make a sale or do any of the farming or whatever else, or they took the money for. So yeah, if you move up a bit, if you move to the right, angel investing is, so I mean, if you're close to VC people or people that invest, there's something called they call it spray and pray. Spray and pray. That means, for example, I have $10,000 today. So I have $10,000 today, and I just want to try out my hand. So you would invest in maybe 10 businesses at $1,000 each. You're spraying your money around, and you're praying that one of them, will make you like a millionaire in dollars from your simple. I think if you had invested in $1,000 in Google at quite some number of years ago, you're probably a millionaire right now, in dollars as well. So it's actually very, very interesting. It's very interesting. But the risk is usually very high with that. It's kind of medium, quite up the ladder. And there's also the earnings potential. So the earnings potential we talked about is, it's quite medium risk because you can invest and actually not get a good dollar paying job. You can make the investment and get an MBA and still come back to Nigeria, earning Naira. And that's tough because you've made some lot of investment. So there's risk. But I mean, that's 10% of 100% of people that go outside. A lot of them either come back and work with dollar paying companies, they work remotely, or they stay abroad and get that, huge earning jobs, abroad. And the return is usually very high, to a large extent. Then lastly, equities. Equities is high risk. So this, let me share my personal story with you. My personal story with equity markets is I put 50,000 naira into the market some weeks ago. Nigeria market actually. I saw one of the stocks rising significantly that done 200% or so thereabout, and I said, hey, this is going to go higher. I didn't do my research. I didn't do my analysis at that point. I just said this must go higher. I just did what they call betting. I just bet on the market, and the day I invested that money, that was the day they decided to go down. And it went down throughout the week. Because Nigerian market can only go down 10% every day. It went down every single day of the week. And even on to the next week, I tried to sell, I could not sell. And for that 50,000 naira, I'll probably be able to salvage like 2,000 naira at the end of the day.
Please tell me what's 9 months.
It was 9 months. It's very interesting. But then there are also people that have made a killing. Imagine those that have made that 200% on that 9 month stock in Nigeria. I said Apple. I said Apple on the previous slide. Apple has done about close to 100% in a 1 year period. In a 1 year period. So how do you guide your investment decision? This is very, very important. Never invest in what you don't know. If you don't understand, I didn't mention Forex here. I didn't mention cryptocurrency here. If you don't understand Forex, you don't understand cryptocurrency, don't invest. Ask yourself, why are they always coming to meet you? Because they're making their money from teaching. Go and check. They're making their money from teaching people. Why are they coming to meet you? Hey, come and learn Forex at this. Come and learn this at this. Come and learn this. That's where they're making their money from. So if you don't understand that thing, don't invest. It's not even an investment because it's trading. I'll talk about that at the end of this list anyway. So put your money into what you understand. For example, I understand Apple as a company. Apple right now. It's a company that is a stock that cannot go down. Even if it goes down today, it's still gonna balance out. It's on the rise. It's on the rise. I think they surpassed Saudi Aramco yesterday as the world's most valuable company. So you have to understand the company, what you're investing in. And you can consult for advisors. You can check out trade forums. You can do all of that. Just do some form of research. What is the macro? When I say macro, I mean the economics. So, for example, is this a good investment right now in the economic? Let's just think of something. So right now, during the pandemic, do you want to go and buy a stock in do I say like an Arik
Oil and gas.
I'm just giving you an example, oil and gas or like an airline. It doesn't make sense. You would lose money. So you go for like a Netflix, you go for a Zoom that we're using right now, rather than investing in those guys that you're going to lose money. So the market does not back it. The economics do not back it. Do your research. That's why I just said research, and I put on what they call that exclamation mark here. Yeah. So another very important part is the credibility of the investment promoters. Who is promoting that platform? Who is promoting that? For example, if it's an Apple stock, we know that Apple is behind the Apple stock. So there's an underlying. The Apple as a company is behind that. So whenever Apple releases good financial numbers, it's going to skyrocket that day. If Apple releases, I think Apple probably their financial statement like yesterday or day before yesterday, that triggered that significant rise, that significant rally. I think they did the same numbers as they did in Q4 2019 during the pandemic. Quite interesting, right? So yeah, understand who is behind it. If it's an agri platform, who is behind the agri platform? Are these people serial? Like I talk about the diesel people. No background. I once answered them an email, and when they replied my email, the English that was used to reply me, is someone that probably did first primary six only. That's when I knew that this is just a scam. It was so disjointed and very bad. To tell you that this doesn't make sense. So does the brand have credibility? And this is even the principle of a lot of large-scale investors. Even Warren Buffett uses this, principle, largely speaking. They also try. You don't lose your capital, no matter how risk. How much of a risk taker you are. You don't want to lose your capital. So be careful. check around the state of capital. That's why I talked about diversification at some point. Check around your state of capital. Check around the regulation. Is there regulation backing, is there regulation backing this opportunity, to a large extent? Like, for example, crowdfunding platforms now, I think the Nigeria Security Exchange Commission is just bringing out regulation. Few weeks ago, a few months ago, there's NBA Forex and a number of other Forex platforms and code that the SEC blacklisted, telling you that, hey, if you invest with these people and money goes bust, don't hold anybody. Hold yourself for being foolish. I remember when MMM was, the thing of the moment. I never did it anyway, and I felt like, and I was seen as the odd one out. In fact, when he crashed, I argued with a friend for close to a month that this will not come back. He said he's going to come back. He came back and he invested, and by the time they went, he was still going to come back, and he never came back. So you want to ensure that this thing is well regulated. The platform is well regulated, this investment opportunity is well regulated. Is there an insurance policy behind it? Is there a strong, for example, like Rent Crowded now is backed by ARM. Is there a strong platform behind this? So you want to do all of that, checking. Then now, benchmarking your returns, very, very important part of the investment analysis. So you want to benchmark your returns, to your inflation, because let's do it like this. So now this fixed income instrument, can we just quickly jump back to the previous slide, just for explanation's sake? This fixed income instrument, the money market fund, gives you an annual return of 5%, and the inflation in Nigeria is somewhere around 13% right now. That means that on a real basis, or when you net off inflation is, is basically the changes in the price level of goods in that country on an annual basis, basically speaking. You get so it's changes in the price level. So is your return able to give you a higher let's say number than the inflation, such that your money is still going to have value? Because what inflation does to you is that it robs you of value. So for example, the naira is losing value by 11% or by 12% every year, in the real sense of things, because of that high inflation, and that fits into why the naira is always very weak as a currency, compared to the dollar. Because in the dollar or developed market, you have inflation as low as 1%, to tell you how advanced those economies are. So you want to benchmark to inflation. Is this opportunity going to give me a higher return than inflation or not? If it's a dollar-based investment, you want to also benchmark to you check your local investments. What is the return? What is the inflation in the local market? Nigeria. Is dollar investment going to beat that? Is it going to beat the US inflation? You just want to check all of those metrics that such that when my money comes back, it's more valuable than what I left it at. But right now rates have really crashed in the local market, that people are just buying up anything that you see, because people just need where to invest at the moment. Just need where to invest, because the money cannot be sitting down yielding nothing. So next one is define your risk appetite. It's very important that you define your risk appetite. I think we jump faster. I'm almost done. Next one is just a case study. This is the last talking slide. So define your risk appetite. Don't let anybody define this for you. Although as a millennial, you're meant to take a little more risk right now with your capital. Risk your money, risk your capital, because they had the risk, they had the return. You don't want to regret more later in the future that, hey, I should have done this, should have done that. Now, then, risk that capital a bit, But you know yourself to a large extent that, can I actually do this? Can I actually take this risk? You know yourself. So define your risk appetite to a large extent. For those of you that earn as little as 50,000 naira, don't go do past yourself. Don't do too much. So you know what to do. Define your risk appetite. It's very important. You also define your investment horizon. It's very important that I think I should have put this together with this. Always think long term. Always think long term. Because if you look at the Apple stock, in the previous slide, it crashed at some point during the pandemic. But now it has recovered and even gone higher than the point before the crash. So you don't want to be buying and selling like a trader if you're not very good in trading, because they're like very, very, I mean, traders do a lot of work. I don't want to talk about what they do and to be able to predict how these things move. But usually you're just a passive investor. You want to invest in fundamentally strong investment opportunities that over a long period of time, like a 2-year period, 3-year period, 4-year period, should give you some superior form of returns. Diversify your exposure. Yeah, consult professional forums, consult professionals like myself, like Olimide, like Obasan, like a lot of folks out there on LinkedIn, and there are a lot of investment firms. You can also check and there are a lot of strong guys on Twitter as well. Then there are a lot of trade forums. There's one called TradeZilla. TradeZilla, if you check it out on Google, you see it's like, I think it's like, yeah, it's a trade forum. So they talk about trading foreign equities basically, so you can know what people are buying and selling at that point, and just copy trade. Just try and do what they're doing. To a large extent, if you're not very, very savvy. Then also diversify. This is very important. I'll show you in the next slide. You don't want to be exposed to one asset too much, because hey, there are risks. There are risks. Even the fixed income, the government can come out and say, hey, we cannot pay you because we are not able to raise enough money from selling petrol or from selling oil. So we can't pay that period. So yeah, moving on to the next slide. So diversify your exposure and also check your investment timing. Is it the right time to invest into an Apple? Is it the right time? Yes or no? You know that. Do your research and you find out. Now, this is the last slide. So what we've done here is a case study construction of an investment portfolio. So we have two people in this place now in this slide. We have Erica Nengi Watoni. We also have Brighto, Neo, and Kidwaya. We have these two guys. These two people, they want to invest. Erica is
did there. But it's fine. I see what you did there.
Yeah, so Erica is 25 years old. Brighto is 50 years old. Brighto is 50 years old. Erica is younger, so she has larger appetites. Sorry, Erica is not my favorite character in BBN House right now anyway, so don't think Erica is my favorite character. Yeah. Also, Brighto is 50. So when you're much older, because you're not earning, you're probably not earning, going to earn income any longer. You're kind of like very careful. Your risk appetite crashes to like very, very low. At that point. But this person has been able to save a lot. This person had like $20,000, which is almost times two what Erica has. They both have an investment horizon of 2 years. So if you look closely by the left, so a financial planner has done this work, where you've tried to check, do some analysis and say, okay, I'm predicting that in the next 2 years, this is my target return. I'm going to buy Tesla stocks for this person. This is my target return. Tesla will do me 50% in the next 2 years. I'm going to do a Eurobond fund at 5% per year. That 5% per year compounds to 10%, in over a 2-year period. If you're not reinvesting your coupon or your interest let's just assume it's 10% over a 2-year period. You do rice farming. There was a recent rice farming ad that came out, and that farm was given 40% for a 2-year cycle. Although I think it's very, for the agri guys, be very careful. Don't do very long cycles. 6 months to 9 months is fine. Anything beyond that, beyond the year is outrageous. You want to be very careful. So whether you invest 6 months, take out the money, invest on that 6 months, take out the money, invest on that 6 months, and doing one where you are tied down for a complete 2 years. Hey, military government can take over Nigeria or anything in 2 years, so you want to be very, very careful. You get, Then there's also a rent crowdfunding, 30% return in 2 years, land 15%. Then I'm also putting angel investors because I want to encourage us to become angel investors, invest in people's businesses, invest in people, invest in companies that are starting up. Because this is how billionaires are becoming billionaires. If you see how billionaires are rushing what we're offering right now, because they know that this is going to become a $1 billion venture at some point. So why not you also become a billionaire by just investing as small as $1,000 I'm not saying that it's always rosy. There could be crash, but this is just a modeling, just a model scenario. There could be very, very bad scenarios. That's where you have to manage your portfolio and all of that. But this is just a small portfolio construction. Then you also want to have some liquidity, by holding savings, maybe like a savings bank account or whatever it is. But just small, and it's yielding you 1%, 2% untouched. If you touch it, nothing for you, So if you look at the construction, what we have done here, if you look at for Erica, who is younger, so just comparing to Tesla, so Erica is able to take on more risk, as you can see. So she has very high exposure to what they call it, to Tesla at 50%. She actually has the highest exposure to Tesla at 50%, followed by the rent crowd. Yeah, am I correct? Okay, she has some exposure as well. 10% exposure to the Eurobond fund, 10% as well to rice farming. She also has that 10% to the rent crowd platform. Then she has about 15% to land. So let's say she used one. So both of them use $1,500 to buy maybe land in Ibejudeke or something. As you can see, 50% of their exposure is to land. There's also angel investing to companies, then dollar savings as well, 15%. She actually did very large exposure to the angel company. That's 15% each on both of them. That's a very, very huge risk taker actually. And you can see that reflecting in her returns. So after a 2-year period, her returns by allocating her portfolio in this manner is 53%. So on her $10,000, she was able to generate $15,000. Not return, but that's $5,332 extra amount on her $10,000. So if you look at it on an annual basis, so you divide this return by 2. Does it beat your inflation? Does it beat whatever benchmark you're looking at? Does it beat that? Inflation? Does it beat maybe a return on a government instrument, largely speaking? If it does, makes sense. If it doesn't, you still decide whether you want to, or not. So yeah, net of cost and fees, that's supposed to be 50%. So when you take out my costs, for being an advisor and all of that, you get 3% and transaction costs and all the rest. So if you look at Brighto, who is 50 years old, he has the largest exposure actually to Eurobond because it's much safer, it's much reliable, it's much more reliable. So he has large exposure, at 30%. He also has that large exposure. Okay, he has large exposure as well to rice farming, 15%. He can do that because he has done some buffering by doing as much as 30% on the Eurobond. He can take a little risk on the rice farming and Tesla because it's quite fundamentally strong to a large extent. There's land, there's angel investing, and all the rest. But because Nengi has taken a lot more risk with her exposure, she is able to actually generate superior return at 53%, while Brighto actually has quite some return at 33%. Yeah, so this is basically how you construct a portfolio. I could give the Excel sheet for this portfolio to Olumide. He'll probably share with you guys. You guys just look at it, play around with it a bit, create your own portfolio, design your own. You don't have to have $10,000. So hold your $1,000, hold your $500. If you need to change the dollars to naira, you can hit me opportunity for you, and all of that. So if you also need to change your naira dollars, you can buy dollars for you and send to your DOM account or wherever you need it basically. So hold your exposure or hold it, So I'll share the Excel sheet. I've come to the end of my presentation on Olumide. Thank you everyone for listening to me. We'll now take questions and answers. Yeah, thank you.
Okay. Thank you very much, Bobby. It's been a very interesting and
sorry, my contact is on the last slide here.
Yeah,
so that's my email. Those of you that want to reach out. Exactly.
Okay.
Also check out my Twitter.
Bobby, there are a lot of questions here.
Okay.
Right? There are a lot of questions here. There are also questions for Taiwo. However, what I will try to do, I'll just touch on very few so we can close the meeting ASAP. And then any other questions I will send to your mails. So when you are sharing the Excel file, just share the answers to those questions, and I will distribute to everyone at the same time. Does that work? Does it work for you, Bobby?
Sure, it does.
Okay,
Sure.
okay. So I'll just touch on some very, very key questions, and then we'll go from there. There's a lot actually. Okay. Someone was asking about websites and resources you would advise, but I think you've already touched on that. Yes. Someone was also asking that amongst all the vehicles of investment that you have mentioned, can you rank them in terms of return in light of COVID? I know that we did a risk return matrix, right? Which was very good. But in light of COVID, could you rank them? I would think that yes, you can rank them. But is it something you want to speak to right now, or is something you want to do and then send a response to the person who has asked this question?
Yeah. I think I'll respond that way.
Okay. Yep. Okay, you take a step at it. Okay, no problem. So just take note of the question.
But just sorry to butt it, but just to clarify, you want to be very careful in light of COVID. I'll be very selective with equities, very selective. So you do those guys that have positive exposure, because of COVID. So because people are locked down, people are watching more Netflix, people are using Zoom the more. So you want to invest in Zoom, you want to invest in selective equities. But I mean, on a general scale, I'll be doing more dollar investments, but particularly like a Eurobond fund right now. That would be my top priority. I'm a Eurobond fund. I'll do angel investment as well, because I have that risk appetite. I'll do angel investment. I'm also going to do some fixed asset, because right now real estate prices have kind of crashed because of low demand and also the valuation of the naira. So some of these assets are actually quite cheap right now. So I can do and get some spread, at when the economy recovers. So no one can actually predict anything right now, but you just want to be selective. Like I said, diversify your exposure. Be careful. Make sure you're not too exposed to one particular asset class, so that a return somewhere will offset a loss somewhere. Basically, yeah.
All right, thank you, Bobby. Let me run through. Okay, someone was asking about your away home idea. Does it have any insurance? So essentially, the person is trying to understand if there's some sort of ring fencing, right? So that's one. Sorry, let me take a few others before you answer. Someone was also asking about Euro bonds. Is your capital guaranteed? You said something about the cost being $250,000 per unit. Are you able to buy less of that?
Okay, let me answer those questions very quickly so that I don't mix them up. So yeah, your capital is guaranteed to a large extent, except you go and buy Eurobond from an unstable country. Like Nigeria will try to always meet its Eurobond obligation. You don't want to buy Eurobond from an unstable, economy. So a Eurobond fund is usually the best for people like us, young people. Go to a fund. You cannot do it individually. Let the fund go. So what a fund does is that they give that professional touch. So they will buy up, for example, different companies. They'll just create a portfolio of Eurobonds, basically, and have diverse exposure. So you just have, a percentage ownership in that fund, basically through your contribution, like an Isusu, and you get back your return based on what they are guaranteeing. And so yes, your capital is to a large extent very, very much preserved in the Eurobond, actually. Very much preserved, yes. The Eurobond.
Okay. So someone was asking, what's the best platform for foreign or local equities? For that question, right? Next week's session will speak directly to local markets and foreign markets.
Exactly.
So for the two sessions,
we have a very strong one coming on next week. Yeah.
Exactly. So there will be one person who's talking about investing in Nigerian markets particularly. So you want to buy stocks, you want to buy fixed income in Nigerian markets only. So what Bobby has done today is just a primer. So next week they will dive deeper, right? There would also be someone on hand, and that's the founder of Trove. Trove is a platform that allows you to invest in foreign stocks all over the world, not just US now, US, China, Europe, everywhere. So he will come and speak to about the platform, how to go about, how to use it, the insurance, the sort of insurance they have, their stockbrokers and everything. He will speak about that at next week's session. So as per best platform, I'm not able to tell you what platform is best. I think all of them are great. There's a number of them: Trove, Chaka, Bamboo. I think are the top three now that offer foreign equities. For local equities, there's so many of them, so many stockbrokers in Nigeria now. There's Meristem with Meritrade. There's iInvest. There's I think United. Oh, I don't remember. Can't remember if CHT does retail. Able help me? Does CHT do retail?
Sorry.
Does
Retail dollar?
No, retail.
Yeah, they do retail. They do retail equities. Yeah.
Is there a platform for that?
No. You have to call the broker for now.
Oh, okay. So you have to call the broker. So they don't have it. There's also Greenwich. They have My Trade Book. So there's a lot of them, right? But there are some very popular names. I know that in terms of retail right now, I think Meristem is one of the top names. Like if you look out in terms of brokers, in terms of being very visible for retail investors, I think Meristem is one of them. So you can just check out Meritrade on App Store or what's the other one? Google Play, as it were. Then let me see if there's any other very important one that you should take right now. There's actually quite a number. Okay, someone was asking, so this is two questions in one. At what point does one buy shares of a company? Which medium or platform do you approach the company, or what? Can you shed more light on this? I think we've addressed that. There are platforms that can help you do that. You can
but
buy.
you're going to clarify again for this person.
Okay.
Just a quick one. So,
okay.
Most times when you're buying stock on a platform, whether it's Chaka, whether it's Trove, whatever, what you're trading is in the secondary market. So that means someone that actually bought this stock before, probably when they did an IPO. An IPO is when the first exchange, exactly. Someone has bought this stock before then, so now they're trying to sell and gain prices. So yeah, that's the point when you are actually buying. That's the secondary market. Yeah, I don't know if that answers the question. I think that's the question, Olumide, to a large extent.
Yeah, I guess. At what point do you buy? You either buy at the IPO when the company is coming to the market for the first time, or you buy in the secondary market when the company has been in existence for a long time. For instance, so let me just give an instance of that, right? Nestle Nigeria PLC is listed on the Nigerian Stock Exchange. They've been listed for what? Almost 40 or 50 years now. You were not there when they did the IPO. You were not there when they came to the market for the first time to raise capital by selling shares. So you cannot buy at the IPO. But it's been trading since then. So it's available on the secondary market, which is the Nigerian Stock Exchange, and you can buy from there. So buying from the Nigerian Stock Exchange, there are many platforms that you can use to access Nigerian Stock Exchange. Some of them are the ones I mentioned earlier, like Meritrade, like My Trade Book, like iInvest, and the rest of them. I hope that sort of clarifies. The other part of the question that I wanted you to answer was, when a share is not a dividend yielding share, what's the aim of owning a portion of the business?
Okay, yeah, I mean, so to a large extent, the reason why you want to, I mean, so you will have your own criteria. Do you want a dividend yielding stock, or you don't want a dividend yielding stock? I know Ecobank is not dividend paying for quite a number of years now. I think it started at some point, maybe 10 years ago or so, or whatever. But it stopped, and I think they're planning to start paying again in 2 years down the line. But for you, I think it's actually capital appreciation at that point. So you believe in the management of this company. You believe in the ability of this company to actually grow, because they're investing, instead of paying dividends, they're investing that money back into the business rather than paying you out. So you believe in the ability that, hey, this company is going to actually outperform, over a long period of time, and you just invest and say, but I mean, the story is really the reverse in Nigeria to a large extent, because all those companies are just quite greedy, and they don't want to pay out dividend, and they really don't perform very well even at that, So yeah,
it's just rather unfortunate that you have companies in Nigeria like that. You're not paying dividends, you're not doing very well either.
Yeah, it's rather unfortunate. Yep.
Okay, so that's that.
I think someone is asking about if you're not able to reach your targets due to anything. So you said above in the agri commodities crowdfunding, what if the company is not able to reach the targets? maybe due to anything. Yeah, I mentioned this now. During COVID, somebody put out like a notice saying, hey, we cannot meet up our obligations. But I think they take, these guys take out insurance, agree, insurance on those whatever the so you check their platform, make sure they're insured. I think these guys lead insurance does insurance for a number of these guys. So ensure that they're insured before you actually invest with those guys. So in case there's any the thing goes bust, you are able to actually get your capital back, even if they can't get you a return.
Okay. So I believe that whatever other questions, and I said that earlier, some of the questions that were sent to me earlier, and because of the conversation, you answered them. I know there are questions for Taiwo as well. Unfortunately, he's not able to join us back at this time. So what I will do, apparently it seems like I owe you a lot of things, right? What I will do, I will share